My colleague Nigel caught up with market veteran Sridhar Sivaram of Enam Holdings at the polling booth in Bandra. Take a look.
Speaking to us here on CNBC-TV18, sir. Well, people may or may not talk about politics at social gatherings, and maybe it's debatable as well. But the message you would like to send out, you must vote.
Yes.
Debating or not, that's secondary, but you must vote.
Of course. I mean, it's one of our constitutional rights and everybody should vote. And we get this opportunity every 5 years to determine which government stays in power. And we are the largest democracy. So I'm very proud of that.
All right. Getting to the markets then, we have seen some bit of nervousness getting into the election, but that's normally what we see. It's been a good run, mind you. So how would you approach the markets from here on?
Yeah, so if I look at the markets in a block of 5 years, if you take the last 5 years, markets given roughly 14-15%, and even the previous 5 years it was 14-15% CAGR. I'd be very happy if we get another 14-15% in the current government regime. And I think the probability of that is very high because this government has done a lot of reforms. So hopefully the benefits of that we'll see in the following year. So that's how I will put it. Yeah.
All right, you make a very, very important point because the stage has been set and the benefits will start flowing in the coming years. But there have been various themes, whether it's railways, defense, capital goods. A lot of the stock prices are reflecting some part of this good news. So how would you approach these things?
Yeah, so I think there are pockets where the market is, over exuberant and we will see time correction or sometimes even in price correction. But what we will also see is the earnings will be strong in some of the places, as I mentioned, like capital goods. You'll have pockets where, there'll be very strong earnings growth, especially on the utility side. We are very bullish on the utility, which is the government has focused on increasing the wind and the solar part of the, utility. And in general, we are seeing government is spending almost 10-11 lakh crores of, their allocation for capital expenditure.
Right.
All this will benefit benefit the sector. Finally, it's stock specific, so I would leave it at that.
All right. Sir, one question that I wanted to ask you is, the domestic money has been very good. Rock solid, you have a mature Indian investor out there, which has definitely been holding up the markets. But the problem is the FI flows have dwindled down. Do you think that they're waiting for let the stable government come in there, let us see some kind of continuity, and then they come back? And if someone asks us, the markets, the upside could be limited as of now because we're already trading at elevated valuations. But maybe once the FIs come in, that's what could take us higher. Your comment?
Yeah. So I think I've been saying this, that emerging market as an asset class has been losing its flavor because it hasn't given any returns for 10 years. Even if you look at the 20-year returns, it is in very low single digits. As a result, we are seeing outflows from emerging markets, and India is a collateral damage. What we are seeing, FI outflow, is also the fact that emerging markets are seeing outflows continuously.
Yes.
I think only two countries have given returns, which is India and Taiwan. If you take the last 10 years, in dollar terms, 7-8% returns they have given. Most of the other markets have been very poor. So I think eventually people will look at other asset classes, maybe in Asia, ex-China sort of an asset class. But we will see some flows once we see stable government. But as of now, I think it's more because the emerging market as an asset class is losing money. And that is what is reflecting in the FI outflows.
Well, interesting, right? Because India's weightage on the MSCI Emerging Market Index itself was around 8%, I think, 4 years ago. That's moved to 18%, while China's come down from 40 to 25%. So that's really the kind of outperformance you've seen in the Indian markets. Since we're talking about asset classes, I can't let you go without asking you about gold.
Yes.
Now, that continues to be the rock-solid investment. It's a quiet performer, so to call it. Gradually giving you those returns, and now you have the dollar play as well in there. Your view, how much of the portfolio allocation should go to gold? And at these fresh all-time highs, you don't stop, you keep allocating?
Yeah. So I've been maintaining that gold as an asset class, you should have between 5 and 10% at least. And sovereign gold bonds are the best way to invest. If I go back to 2003, that's almost 20-21 years, gold and Sensex were both roughly the same, 3,000-4,000 as an index. And today both are in the 72,000-73,000 range. So gold has matched step to step with the Sensex, giving you returns which is roughly in the 14-15% range over a very long period. If you take the last 5 years also, it has done very well.
Yes.
So I don't see any reason to change my view on that. It's a play on the currency, which people underestimate, that this is the only proper hedge that we have for the currency. So I'm still very bullish, and you keep adding to your gold portfolio.
Well, thanks a lot for speaking to us here, sir. And I go by that advice. I'm keeping my SIPs going, but also the sovereign gold bonds.